Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia Shenoy, and joining me on the show today we have Nigel, there's Rima as well. Folks, hi, good morning.
Hi, good morning. Welcome back. How was Delhi?
Well, Delhi was pretty good. I mean, good to get a pulse at the conference, at the BOFA conference that I was at yesterday. But, that was very, very good with regard to markets, economy. And the overarching theme is that the next decade belongs to India, the next couple of decades. So that was positive. But just one word of advice, in case you guys are traveling, make sure you reach the airport way in advance. Treat a domestic...
Bombay
as
Delhi?
well as Delhi.
Okay.
And that too 5 a.m. flight I took in the morning. So, you take more than half an hour just to get past the security check. Okay. So be cautious when you're traveling. Just get there very, very early. And we're still a week away from Diwali. So imagine how things are going to shape up on both sides, Delhi as well as Mumbai. So
I thought you would caution us about the pollution and the visibility, right?
I had my mask on at all times. So
it's crazy, the kind of pollution.
It was crazy.
Yeah.
And, at 5:36 in the evening as well, it's dense. So
highest AQI in worst pollution in the world, right, in Delhi. So
indeed.
the most polluted
needed
city.
to be quite cautious yesterday. But it was a good conference. Happy to be there and happy to be back today, all set to take on the market.
Okay, and happy to have you back in the studio. Well, the market has been doing fine, right? I mean, we've been up for 3 straight days now. So let's just put all the cues on the table for you very quickly. The Nifty, if you look at it, has had a decent run. I mean, from the 26th October low, the Nifty is now up almost 550 points. And a couple of crucial levels are all set to be hit. One is, of course, the 50-day moving average, which is at 19,560. There's still a little bit distance for that. And the other is the 20-day moving average, which is at 19,411, where we are currently. So let's see if the market can scale that up. The buy on dips for now is very much intact. The US markets were stable. The Nasdaq had a 7-day winning streak, and there was buying from domestic institutions in the cash markets as well. Now, there are a couple of global cues that you need to watch out for. All eyes will be on the Fed speak for any kind of commentary on the interest rate cues, etc. And a lot of large caps are providing support for the market now. So that's a good thing. Post earnings, we've had a lot of positive earnings from large caps like L&T, Titan, Tata Motors, SBI, ICICI Bank. So you're going to get a lot of support from there. But there are a couple of other big cues today. There's the Mamaearth listing, the Honasa consumer listing that happens today. So all eyes will be on that. We'll track that very closely. And apart from that, you have the state elections that start today as well. So we'll track that one. There's the weekly expiry of the Fin Nifty that happens today. And we need to see if the market can conquer that 19,400 mark, which is the current 20-day moving average. So a big day today, a lot of big earnings as well in the broader markets, the likes of Apollo Tyres, etc. We'll track all of that closely. But by and large, the Nifty has been holding on to that 19,400 mark, closed above it yesterday. And global cues are also stable. So looks like the market is sort of inching forward day by day.
I think today is going to be a day of consolidation. We've had 3 very solid days of gains in our bag right now. Yesterday, we added 180 points. The day prior, we added 97 points. On Thursday, we added nearly 150 points. So after 3 days of big gains, today markets could just consolidate, and that's what the GIFT Nifty is suggesting. But bear in mind, Asia's actually opened firmly lower. So Kospi, which rallied 4% yesterday on the back of the short-selling ban till June of 2024, has retreated 2.5%. Hang Seng has extended its loss, about half an hour back. Hang Seng was down about 0.7, 0.8%. Now it's down about 1.25%. All eyes in the Asian market universe will be on the Reserve Bank of Australia, where economists are seeing a rate hike of 25 basis points. Sonia spoke about, a few things to watch in terms of stocks. Bajaj Finance, the QIP, earnings reaction from HPCL, Nykaa, Imami, Gland Pharma. Today, there's only one Nifty company, Power Grid, which will be reporting its numbers, but many in the F&O market and important mid-caps like Alchem, InfoEdge, Shree Cement, IRCTC, Trent, Zydus, and Honasa Consumer, of course, we will be talking about it. You spoke about, the Fed speak. So Jerome Powell will be speaking twice this week. The first one is tomorrow, which is where he's giving an introductory remark, to a conference on financial statistics. So economists are saying tomorrow's is going to be a non-event. But the one to watch will be the day after. That's on the 9th, on Thursday, where he will be talking on the subject of monetary policy in a challenging global environment. And there you're going to have a Q&A. So in the Q&A, you know, he could be...
some commentary.
Maybe it'll be some commentary that the street will be watching. But Nigel, yesterday at least was very strong. Today, markets could just pause, take in, sink in that momentum.
Well, what was good yesterday was Indian markets ended at the high point of the day. The last few days, we've been opening up in the green, but we've been unable to build onto those gains. But yesterday, you look at the chart, it tells you that the Nifty Bank, both of them ended closer to the high point of the day. And yesterday, the 20 DMA as well was conquered. So technically as well, this market is looking pretty good. The FIs, what did they do? Well, they covered shorts, and they covered shorts big time. Close to 11,000 short contracts were covered out in trade. And now the positioning has come down to around the 80% odd. So let's pull up two graphic points. One is with regard to the Nifty's move. From the start of this series, the way the Nifty has been trending higher, that's a beautiful chart. Just take a look at that. We have been trending higher, on the right-hand side. While on the left-hand side, you have the short positioning. Perfectly tallies in there, right? The positioning has come down from around 90% odd to around 80%. So the shorts, they have got squeezed out. And that's the reason why, in fact, the markets have trended higher. Pulling up the options data, well, an overconfident bear has done them no good, actually. And that's precisely what's happened for the FIs. They were net short on the markets and they were writing calls aggressively as well. I recall at the start of the series, we made this point that net shorts in the system is not such a bad thing. And take a look at the call covering we had yesterday. Because those calls were written earlier, the market started moving with momentum, and that's why those calls did cover out. And now on the downside, well, you have some kind of writing that you've seen. 19,300 put, 19,400 put, both of them were fairly active in trade yesterday, telling you that there is writing at lower levels, and that explains why the PCR as well has moved up. And at the start of the series, the point we made was that the FIs, the net long position is only around 11%. The last time around when it was only around 9-10%, or we had an 800-point rally. Well, we're halfway through the series, not even halfway through actually, and the November series has shaped up quite well because we're up 555 points. What are the levels you're looking at then? On the Nifty itself, the recent low that we saw, that's post the war breakout. Everyone says buy the dip with regard to the war. Well, after that dip, you actually have dipped close to around 600 points because the low we made on that Monday morning post the breakout of the conflict in Israel was around 19,481. So that's going to be a crucial level on the upside. Resistance comes in at around 19,500 or 19,550, which is the level that you're looking at in terms of resistance, while support will be the recent level where you had resistance, 19,250 odd. The Nifty Financial Services Index, that plays out expiry. Those two levels, yes, those are the precise levels that we're looking at. 19,625, that's a bit of a resistance zone on the upside. And I say it because the highest amount of open interest on the Nifty Financial Services Index for the contract that expires today is at around 19,600. While on the downside, you have the 19,400 put, which has the highest open interest on the downside. GIFT Nifty suggests we pull back. I think the bias has shifted to being long right now. You want the Nifty to continue to dominate that 20 DMA as well as the Nifty Bank. So the trend in the near term seems to have shifted higher. But as we mentioned earlier, the shots in the system, they got squeezed out. And that explains why we are up 550 points, guys.
Okay, interesting analysis there. Let's get the show started then.